Welcome back. I'm Brandon, the HBAR Bull, once again joined by Zepsi. We both do some contract work for the HBAR Foundation, but we don't do these weekly updates in any official capacity. We're just coming on personally to give you the latest in the Hedera ecosystem. Welcome, Zep.
How's it going, Brandon?
Hey, it's been a bumpy week, but we also have a lot of good information to get into. But of course, it's really important right now, considering everything that's going on, to say none of this is financial advice. Use it for entertainment or educational purposes only. Also, consult your local financial or legal advisor before you get involved with DeFi or anything like that. But we do have a giveaway at the end. We talked about that last week, so we'll get into that at the end of the video. We also have David Lane from Pari Fund. He's been in traditional finance for 2 decades, and he has some really good insights on the FTX saga. So go ahead and listen in, and we'll talk about it after. Thanks for coming, David.
You're welcome, Brandon. Thanks for having me.
All right, so we'll get right into it. Can you explain, in your opinion, what happened with FTX and what we should expect going forward?
Yeah, sure. I'd love to. So high level, let's take a step back. You've got two entities. You have FTX and you have Alameda Research. Alameda Research is the proprietary desk hedge fund owned by Sam Bankman-Fried. And then you have FTX, which is the exchange. Binance was an original investor in FTX. When Binance exited their investment, they received roughly $2 billion in Binance USD and FTT token, which is a token that FTX created to reduce trading fees. FTX, the two largest holders of FTT are Binance and then Alameda Research. And because they held so much and the circulating supply was so little, it kind of artificially held the price of FTT up. What happened was Alameda Research was using FTT as collateral to take out loans to, fund their business. What we see happened was, and this is totally fine. The issue arises is, did Alameda use funds from FTX to fund their? That's illegal. That's unethical. That's using client funds.
Sure.
About 4 days ago, CoinDesk released an article questioning the balance sheet of Alameda. And then coincidentally, Binance announced that they would be exiting their full position of FTT, knowing full well that this would tank the price. By tanking the price of FTT, you then lower the collateral value of the FTT that's backing the loans that Alameda had, and you kind of have this storm. And what happened was, because of everything with Three Arrows and Celsius, FTX and Alameda are supposed to be separate. If they're truly separate, everything's fine. FTX should be okay. They should be liquid. They should be solvent. But there's always been a gray area between Alameda and the relationship between FTX. It's never been truly defined. They've also been kind of usually fractional reserves for banking, not a one-to-one. So basically, an article came out. Binance announced that they were liquidating. This essentially caused a run on the bank for FTX. They've halted withdrawals. And then furthermore, Binance announced a letter of intent yesterday to acquire FTX pending diligence. Rumor has it today that that deal is most likely not going to go through. I think upon just an initial glance of Alameda's and FTX's balance sheets, they're looking at FTX's balance sheets, but you need to keep in mind that there's this sister relationship with Alameda that's never been defined. And it's kind of like an Achilles heel right now. So this caused a panic, caused a bank run, caused a liquidity crunch with FTX, and they paused the withdrawals. And right now, Binance is they are in the process of acquiring pending due diligence, but it looks like that deal isn't going to go through. So in Binance's shoes, they'll probably just let FTX fail and then just pick up everything on the cheap.
Sure. And what do you think the implications are for crypto and more specifically Hedera?
So crypto in general, this is another black eye. But it's a positive for DeFi in a way that this can't happen on DeFi, right? Everything's truly transparent. But this is another black eye for centralized exchanges. It's a black eye in general for retail because FTX was kind of this crypto darling, right? You've got Sam Bankman-Fried doing this effective altruism, lobbying Congress for regulations, out to protect retail. It's going to be anyone who is thinking about coming in, their two primary platforms are traditionally FTX and Coinbase. That's the best fiat on-ramp. Right now, you're going to see a lot of people. I mean, it's already a bear market to begin with. Interest rates are coming up. It's a black eye for crypto as a whole. Hedera, specifically, if you noticed, price hasn't been affected too much. I mean, we're trading below 5 cents, but, relative to its peers, it's holding up well. I don't know if you saw this morning, but, transaction speeds are up. I think they're doing some testing. And then from a personal standpoint, I can't keep up with what's going on in the Hedera ecosystem anymore. Back in November, it was a lot easier. I've said it before. It's just the innovation that's coming out of it is booming. Personally, I think I still don't even think the liquidation from Three Arrows Capital is complete. I think that's been a lag overhanging the market. If FTX is going to be insolvent, there's going to be more liquidations to come. They're clearly covering positions right now. If anyone here is invested in Solana, I think that's trading at like $9 right now. They're liquidating everything. And because of the size of the crypto market and the size of these balance sheets, it's going to take a long time for this unwind to happen.
Sure.
So I mean, if you're sitting in cash, I would say wait. Not financial advice, but my thought is that these are going to trend low. Prices are going to trend lower until this really comes through. And then, coupled with the macro backdrop of rising interest rates, it's going to be hard to see retail deploying in any meaningful capacity anytime soon. From a venture capital perspective, you had a lot of seasoned names that were involved in the equity of FTX. Tiger Global, NEA, New Enterprise Associates, SoftBank, Tomasek. You have all these like seasoned industrial, blue chip investors, so to speak. And I take a step back and wonder where the diligence was. Yeah. I mean, a balance sheet is something that's like what you look at. Anytime a company is getting acquired, the first thing you look at is a balance sheet. And I'm shocked that something like this was able to slide through. I'm willing to bet no one's going to admit it, but I think I think there was a lot of assumptions. I think everyone assumed, oh, he did the diligence, we've invested together, I'm going to trust it. So yeah, we'll see what happens. But yeah, no, just added thought on the events that have transpired.
Yeah, absolutely. David, thanks so much for your insights. We really appreciate it.
Brandon, thanks again for having me. I greatly appreciate it.
Yeah, so the FTX thing is an absolute mess, but I actually think, like David said, it's positive for DeFi, right? All of that is completely transparent. All the issues we've seen this year, whether it's, the stuff with Three Arrows Capital or this with FTX or a lot of the other stuff that's going on, it has to do with centralized stuff and everything that's happening in the back room. So I think there's actually a lot of positives that can be taken out of this, but that has to be communicated well to our regulators and legislators, or they're going to make a wrong turn and do some things that are ill-advised as far as the regulation goes. Do you have any thoughts on that?
I think the only thing that gives me some kind of comfort, or if I couldn't go as far as say comfort, some kind of sense of security is the fact that FTX wasn't registered in the US. We've still got Coinbase, who is, they've been doing a lot. Obviously, they got listed. They've been working a lot in Washington as well. Obviously Sam Bankman-Fried was, but all of this calamity really happened outside of the shores of the US, and I would like to think that gives them. Obviously, there's actors on each side of Congress, some of them which are very against crypto, and some of them that have us in their favor. And I would like to think come from this really is just a massive push for regulation, but done in a very positive way with actors like Coinbase, beyond keeping it within the US, because there's so much potential there, with someone like Coinbase, Brian Armstrong. Like I saw Brian Armstrong, he actually did a response to Elizabeth Warren's tweets. And he was saying, we're here. We want to help you regulate. We're one of the biggest exchanges. We're US native. We're not Binance. We're not SBF. And we're here to help. So, I'd really love to see Coinbase step up there and they get into more sort of succinct conversation there. And I think that's sort of, if I can draw any silver lining, it'll be from a stronger relationship with Coinbase moving forward.
And also from Hedera's perspective, they want to be the trust layer of the internet. We talked a couple weeks ago about FIS and their proof of reserves. That's one way they can bring transparency to the financial markets. Also, all the other good things that are happening, whether it's, supply chain tracking. Heck, they're doing warnings with Hala in the Ukraine for air raids. So there's all kinds of positive things, not to mention unlocking the potential of billions of people who are unbanked throughout the world. There are plenty of positives here, and we have to make sure that message gets out, and the centralized issues that we saw here and prior in the year don't get wrapped into this is crypto's fault. This is individuals doing nefarious things. It's not crypto in general. So call your representatives, make sure they understand the differentiation between these things. But let's get into something a little bit more fun. Zep, can you tell us about Realm this week?
Yeah, so in true Hedera fashion, we managed to time the market when we get an EA Sports partnership with the collapse of everything else. But the interesting or perhaps exciting feature of Realm is that this is the first time EA Sports have got into the DLC industry through some kind of partnership with a project. And so within other video games, you've got games like Counter-Strike, you've got games like Dota and all sorts of other games. They have their own platforms, which are essentially there to enable things like enhanced data tracking, again, not on a ledger, but enhanced data tracking for players. Within those platforms, you have more competitive elements with more the professional side of things. But the main theme that these other big games have is that they have these platforms. On Apex Legends, which is one of the biggest games at the moment, I think it's number 8 most streamed, come down from number 1 on Twitch, which is massive. It had a massive acceleration into the limelight, and it's settled down a bit now, but still a lot of money, a lot of gamers. I play that game like every other day. It's like the main game I play at the moment, and I play a lot of games, or used to play a lot of games rather. Leveraging the Hedera consensus service, which is what I really like to see, is they've created this platform called Realm Esports, and so all of the data currently that is tracked for Apex Legends esports players goes into a platform called Liquipedia. And Liquipedia is essentially a platform like Wikipedia, where you can go in, sort of process edits yourself. There's, it's difficult to trust the data there. But what Realm have done through this license with EA Sports, which is again massive, very hard to get that, they've created a platform where all the data that comes out of these matches is tracked immutably on the Hedera ledger and it's all queryable by people that are interested. So you're a big team. There's a lot of money in esports. You're a big team. You're looking to scout some players for your team. Where are you going to look? You're going to bypass Liquipedia, which is currently the main source of information, and you're going to go to the place where that data is the most solid, where you can completely trust it, where you can completely trust your money is going to the best players to get on your team. So it's now there as like a resource. And I would like to think, given how much traction this platform's already got on Twitter, I saw like 1,400 likes from non-Web3 native players. I would like to think that this is going to become the data reservoir for Apex Legends, where these big players are going to come in, where these big teams are going to look in and going to see them and say, this is who I'm picking up. And not only does it mean that this data is there and it's incredible and it's a good resource for it, but it means that the players that are semi-professional can genuinely rise to the top based on their own merit, based on their own skills as a player. So it's the first time that we've ever had that opportunity for the semi-professional players that don't necessarily have a name on Twitch or whatever else the big platforms are to genuinely to rise to the top purely based on their skill. And that's great for me to see. I think there's going to be a lot of new teams a lot of teams that are focusing on this platform just for that data element. And then obviously alongside that, we've got the competitive element for the tournaments. And what this has done for the first time is given players that aren't professional the opportunity to compete for money. There's a huge amount of gamers globally. Like, it's one of the biggest, fastest growing industries in the world. But no matter how many hours you put into it, if you're not putting in every day of your life into it, you're not going to end up being paid. And so they've brought down this barrier to entry, which is, it's not a play to earn mechanism per se, but they're creating these cash pools whereby anyone can enter. So it's like, you're a semi-professional player or below, obviously the prize pool will get higher with your skill, but it now means that like an average player or, your average show that plays 3 times a week has the opportunity to compete. And that to me is really cool. And there's been a lot of excitement on that on Twitter for sure. And yeah, just all in all, EA Sports partnership, data integrity on the HCS, and far more players hopefully coming in to compete there. So all around great partnership.
Yeah, so can you go into, for those of us that aren't gamers, can you kind of go into why it's important to get EA involved here, why their collaboration and involvement's important?
Yeah, so I mean, within the Web3 gaming space, there is 2 factions. The ones that are Web3 native and want gaming to come over, and the ones that are pure gamers and absolutely loathe Web3. And the history of this goes back to sort of micropayments, this sort of more of a mechanism of pay to win, which is one of the worst things as a gamer that I believe has ever happened to gaming. It's just, big companies saying if you pay X amount of money, you're at a competitive advantage. It's completely against competitive sports. And esports is a competitive sport, which people forget. It's the equivalent of, taking steroids to compete in the Olympics for gamers. It's like being able to pay, not only take steroids, but only the richest people can take them, if you know what I mean. So what this has done is solidified. I think it's acted like a Trojan horse for gaming, with Hedera at the forefront. Normally if we just gone in and said, okay, Web3, this is a new Web3 platform, gaming meets Web3. It's not a new thought. And it's a thought that's very wearisome for gamers. But what Realm have done is, even in their press release, it was saying terminology, rather than Web3, it was DLT, rather than blockchain, it was hashgraph, rather than play to earn, it was competing for a prize pool. This kind of language, data integrity. There's no, never once was the loathed word of play to earn or anything that insinuates that gamers are being milked. Completely opposite. Gamers are now all able to compete for this reward. And so this Trojan horse, which is Realm, I believe, has now come into gaming. And I believe already it's been a success. I mean, if we look at their Twitter, which I mentioned earlier, their introduction tweet has something like 1,400 likes. A lot of quote tweets, and I was like, okay, it's just going to be, the HBAR Barbarians and some Web 3 people. All the quote tweets were by gamers. There was like esports players. I saw about 6 or 7 esports players. All the comments were by gamers saying they're excited. And I didn't see one comment that complained about a Web3 component. So, to have EA Sports at the forefront of ushering in Web3, which they're very sensitive about, and to have Hedera at the front of that, and for the gamers to be embracing it, is very exciting for me, for sure.
Yeah, and it always seems like we get this massive news, whether it's gaming or we got the huge spike in transactions this week. It always happens when something else is going on that overshadows it for Hedera, but still plenty of great stuff being built behind the scenes. And speaking of that, we'll shift gears again into ESG and the environmental side of things. Before we get into the stuff that the HBAR Foundation is doing, I want to show a quick clip from Lehman that was talking about the efficiency of Hedera.
There's also people who say, well, blockchain has no value anyway. Why are you wasting anything on it? That is now being proven totally false. Many real-world businesses are building on blockchain in ways that are fundamentally important. And even if all you cared about is being green, if your credit card is something you need, Visa credit card transactions use 90 times as much energy as Hedera transactions. So if you did it through Hedera rather than a credit card, you're still using 90 times less energy. And so if all you cared about is being green, you should still do it. There's a real value. And you then are decentralized, you have better trust, it is faster, it is lower cost. You have huge advantages. Ledgers are going to take over the world the same way databases took over the world of record keeping on paper. It's the same thing.
It's always good to hear Lehman talking about that stuff, and the message he was saying, it can't be repeated enough. But the HBAR Foundation is doing a lot of stuff in the environmental realm as well with the Sustainable Impact Fund. Can you tell us about COP27?
Yeah, so I mean, COP27 is when all of the leading companies in the world, prime ministers, presidents, whoever, all congregate to talk about how we're going to achieve goals set out by the Paris Agreement in 2015, which was this idea that we can't hit that feared temperature rise of 1.5 degrees Celsius. We got to get to carbon, we've got to be carbon neutral by 2050. These kinds of ideas have all originated from these summits. And this year was all about the implementation of the last COP. We had the last COP, and there was a lot of ideas of carbon credits, ESG markets, this kind of stuff. But this year is all about the implementation of that ESG technology. And obviously we've seen Hedera, they got the Sustainable Impact Fund, $100 million for 2022. And we've seen so much come out of that, including the open source Guardian. And really that technology, along with something called ARMS, which I'll get into, is essentially reshaping these sustainability markets. And being at COP27, when it's all about implementation of these markets, to have Hedera there with this novel technology, which is so integral for the efficiency of these markets, has been super exciting to see, I think. And we've seen so many announcements come out in the last sort of 6 days alone. We've seen 2 of the new sustainable building blocks come out. We've got the next sustainability building blocks coming out shortly. And we've got all of the partners in our ecosystem sort of coming up to the table. And so I think to talk into the actual announcements now, One of the most exciting ones that I've seen is the ARMS by Block Science, which is the Automated Regression Maker Markets. What this builds on is the goals that have already been set out by the Sustainable Impact Fund. And so the first one, which was bringing sort of standardization to these markets and implementing them through open source infrastructure to create carbon credits like the Guardian, those two are actively being built on. We've got, we had Dovu, who put out, they did a use case of Dovu implementing the Inter-Work Alliance's standards with the Global Blockchain Business Council. We've seen lots of different sustainability ecosystem projects on Hedera being very vocal about using the Guardian. So that's the standardization and audibility there for two of the goals. But the third one, and arguably one of the most important for these markets is liquidity. Because if you're going to have these Fortune 500s, if you're going to have the biggest companies in the world offsetting their carbon, they have to have the liquidity there to be actually to do it. And not only do they need the liquidity, they need the liquidity of the highest quality carbon assets that aren't being double spent, that are, coming from trusted sources and can be seen the entirety of their life cycle from creation to retirement. So combining the Guardian and the ARMS, we now have liquidity in these markets. A lot of AMMs in DeFi use fungible assets, fungible tokens, like whatever that might be, like Source, et cetera, et cetera. But with more complex assets like carbon credits, whereby you have so many different features that attribute to its price. That could be, the vintage, i.e. the year. It could be the quality based on where it's coming from, what land it's been harvested from, the humidity even that we can track through IoT sensors through the Guardian. There's so many different aspects that determine the price of an asset like a carbon credit. And the ARM basically collates all of this information and then enables price discovery of these assets in a way that creates much higher liquidity and much higher automation for these markets. Sorry, going on a bit of a tangent here. But the first market to implement this on top of that announcement was Tolam. And I'm very excited to see that, the Guardian mixed with the ARMM on an entirely new market, two novel mechanisms, both on Hedera, a seismic shift for the current state of the carbon market. And obviously, every company in the world is looking to retire and buy carbon credits. So sorry, very long-winded response, but very exciting if it makes sense.
Yeah, so there's all kinds of innovation that's coming out of the space and the Sustainable Impact Fund. Another one is Evercity. So Evercity is a Berlin-based green debt and carbon origination platform and developer of an open source sustainable finance protocol. It will utilize Hedera to create new instruments for green debt and carbon markets. The Guardian framework, like you mentioned, for Hedera will be used to accelerate the development process and make sustainable finance more accessible to subject matter experts across the globe. So Joseph Palant, the founder and executive director at Blockchain for Climate, said, "I'm excited about the launch of Evercity's Carbon Forward platform on Hedera, as we can now connect real projects with capital and demand, enabling project developers to implement their project and complete the offset standards and issuance process. As demand for climate action grows, secure delivery of early project carbon finance is often a stumbling block to achieving emissions reduction and removal targets. With Evercity's Carbon Forward platform, leveraging Hedera's Guardian, we're focused on clearing that pinch point and getting society on a quicker path to addressing the climate crisis." So like I said, there's all kinds of innovation coming out of the Sustainable Impact Fund. They're really making their mark and making Hedera the premier network to build on when it comes to ESG use cases. Is there anything else you'd like to talk about in ESG before we move on?
Oh, so yeah, yesterday we had Flow Carbon actually. So Flow Carbon, I think, are one of, if not the leading sort of carbon credit Web3 companies. And they announced yesterday that they're leveraging the Guardian, which is, of course, the open source piece of infrastructure built on Hedera, to essentially enable sort of more trust and transparency and auditability of their own carbon credits, is what I understand. So one of the leading carbon credit Web3 native companies has now moved on to the Guardian because, well, the Guardian is, sort of, I don't think there's any debate, actually. Not only is the Guardian the best-in-class piece of infrastructure for this in Web3, but also well beyond that. So hopefully we'll see more and more of this kind of announcement. But really great to see that. Really great to see the relationship there. And really great to see how excited their community was, actually. And to see Wes, Rob, and Hanya, who are part of the SIF, and Jonathan as well, all out there together at the moment at COP27 with the Flow Carbon team. So yeah, hopefully we'll hear more and more about that relationship.
Yeah, I'm sure more will come out all the time. You ready to get into some transaction analysis? All right, Zep. So over the past 24 hours, we're looking at about 1.5 million transactions. But the big news really is there was a test done by a real world use case on Wednesday just to pretty much test out the network and see how it was going to work for a use case that they're going to launch later on. And they did 24 or 26 million transactions in a 24-hour period, which more than doubled the previous record we had. Exciting to see. Do you have any thoughts on that test, Zep?
So, I mean, I think we figured out 24 million of them were done in 10 hours. We've already beaten the daily world record, the daily record on Hedera. And if you double that, that's going to be 48 million. And then you add a bit more to that, that's going to be what, sort of 48, 56 or something, 55, 54 million in a day. And that's just, staggering. And if this is a test, it could be even more than that when it actually does come to market. And I've heard through the grapevine that the test was an overwhelming success. So hopefully that gives us the green lights for something staggering. And I don't know the dates, nor does anyone, I don't think. And the last thing I want to say is soon. So hopefully we'll hear more about that at some point.
The next thing I wanted to touch on is the smart contracts. We're still sitting at about 20,000 smart contract transactions per day, which is good to see for our DeFi space. Those, of course, are high-value transactions bringing in 5 cents a pop for the Hedera network. And over the past month, we've seen a slight trend up in those smart contract transactions, so that's good to see. Time to consensus, still sitting under 5 seconds. Do you have anything on account creation?
On the daily, we're down slightly, but on the week we're up again. So that's the main one I'm looking at there. We're up 12% on the account creation on the week. So hopefully that'll just go again into next week. We'll keep seeing that go up.
And going into our fungible token summary, I did get some information on the energy trade token. Most of those transactions are taking place through a faucet. That use case is running pretty much continuously. I'll put a link to their website down below. I can't say as to what the utility is quite yet. I haven't done complete due diligence on the project yet, but it has to do with tracking IoT energy usage. So we still need to do some digging on that, but at least I did establish some communication with the founders of the project. We have wrapped HBAR, we have Sauce, we have HBARX, again showing that our DeFi ecosystem is doing well, and we have Not a Protocol token also in the top 5 there, and that's Slime World, one of our games. So DeFi and gaming still doing well when it comes to our fungible token summary. All right, do you have anything as far as the NFTs in our ecosystem?
I think GP NFT is at the top there, might be Gangster's Paradise. And I actually, unfortunately, don't know much about them, but I believe they sold out yesterday on their launch. So amazing job to them. And I believe that's them there. Yeah.
And we see Creamy's in there, and there's a few other ones that I don't recognize, which means things are expanding a little bit. Our NFT ecosystem is always looking good, and I love the innovation that's taking place in that space. All right, well, go ahead and get into DeFi now. Of course, none of this is financial advice. I just want to reiterate that. We do have a good clip from SaucerSwap here explaining their single-sided staking. So let's take a look at that. Thanks for swinging by, Peter.
Yeah, thanks for having me, Brad.
Yeah, absolutely. So can you explain single-sided staking on SaucerSwap?
Absolutely. Yeah, so single-sided staking is a new feature we're releasing. It's multifaceted. It's a really exciting value add to the SaucerSwap protocol. So in essence, this feature will allow users to stake Sauce, which is the protocol token of SaucerSwap, into a smart contract and receive a derivative token called XSauce. And the whole idea is that the ratio of Sauce to XSauce increases over time due to 3 distinct reward mechanisms. And we're really excited about this triple reward structure. So the first reward mechanism is HBAR native staking rewards. The second is farm emissions. And the third is a portion of swap fees from all liquidity pools on SaucerSwap. So with regards to the HBAR native staking rewards, this will work as follows. Basically, all of the HBAR on our protocol, and last I checked, it was 128 million HBAR, will be staked to a Hedera permissioned node to receive rewards.
Okay.
And so these rewards will be swapped to Sauce once a day at a random time, and then sent to the single-sided staking pool. So this increases the ratio of sauce to XSauce, which is what I was talking about before. This reward mechanism is really exciting to us. I think it leverages Hedera's HBAR native staking reward mechanism, which is novel. And the other two rewards are those farm emissions and a portion of swap fees from all pools. And this further increases the ratio of sauce to XSauce, which translates into a higher APR. So we put out a table comparing sauce staking to HBAR native staking, as well as sushi staking, which is staking the sushi token on SaucerSwap. And this table can show some of the differences in the reward mechanisms, the APR, the utility of the derivative token, stuff like that. So that's a great table to check out if you want to learn more. In addition to this triple reward structure, another considerable benefit of single-sided staking is that it carries zero risk of impermanent loss. So we ran a poll on Twitter and we asked our users what aspect of sauce staking they were looking forward to the most. And the triple reward structure came in first place, but just behind that was the element of zero impermanent loss coming in second place. So this is a pretty considerable benefit. And the last thing I will mention about single-sided staking is that there are no lockup periods. So we don't believe in lockup periods for staking. If a user wants to unstake, they should be able to do that immediately. So if a user wants to unstake their sauce, they can do it with the simple click of a button. And there's no lockup. So those three benefits, so the triple reward structure, zero risk of impermanent loss, and no lockup periods, we think it's going to make this feature a slam dunk for SaucerSwap and Hedera DeFi. So as for a go live date, we're currently targeting between November 16th and November 23rd, which is coming right up. And we are awaiting the final audit report from Hacken, who is the firm that audited our core and farm contracts. And once we receive that report, we'll conduct some mainnet testing, and then we will deploy single-sided staking. I will also just very briefly mention that we will need to launch a new wrapped HBAR and router contract when we release single-sided staking. And we actually published a Medium article on this subject specifically that's titled Wrapped HBAR V2 Migration Announcement. And so when we release these contracts, users will need to perform some actions to withdraw liquidity from pairs containing HBAR. So pairs like HBAR USDC, HBAR sauce, HBAR wrapped BNB, those kinds of pairs, everything containing HBAR, and then resupply it. It'll be a very easy process to go through. It's going to be very painless. It's basically a two-step process: withdraw liquidity, then resupply it. And what's happening behind the scenes is that our website will route this liquidity to new pair contracts utilizing that new wrapped HBAR. Again, it's going to be super easy and painless. We will actually put a step-by-step video on navigating this right on our website in the liquidity page. And we'll have a banner on the website as well. So it'll be impossible to miss. And that will complete the liquidity migration to upgrade our protocol to this new wrapped HBAR. So that should sum up single-sided staking. Again, it's coming right up. We're really excited about it. And also that liquidity migration to our new wrapped HBAR and router contracts.
Yeah, the use of SaucerSwap has always been easy from day one, so I'm sure this migration will be fairly easy as well. I've been interested from the beginning how our DeFi ecosystem was going to leverage native staking for Hedera, and this is a really great example of that. So the other thing I wanted to get into is you guys put out a great video comparing different DEXs across several different networks. What are your personal takeaways from that video?
Yeah, well, just making that video was pretty eye-opening. It's, if you haven't seen it, it's available on our YouTube channel as well as our Twitter. So go check it out. So from our perspective, just the UX on some other chains was a bit difficult to navigate from a user's perspective, particularly waiting over a minute for some swaps to confirm. It's just not the best feeling from a user perspective. We had quite a few costly failed transactions. There's always the anxiety of being front run while the transaction is sitting in the mempool of other networks. Hedera doesn't have a mempool, so that's always a plus. And when the transaction is sitting in the mempool and other networks, it creates the risk of further price slippage. So just kind of waiting for your transaction to confirm for over a minute is, yeah, it's just not the best experience. And this video just looked at the speed of several DEXs and not the cost. And when considering the cost, I think that comparison is even more eye-opening. And we intend to put out some data on this aspect specifically, especially when there's more network usage and congestion. So I guess in summary, from our perspective, just using Hashpack and SaucerSwap together on Hedera just felt like a level up. We had no failed transactions. There's no fear of being front run. It's not even possible on Hedera to be front run. As I mentioned, there's no mempool. And the transaction was confirmed with finality in 8 seconds. And actually, Tyler from the Hashpack team said that it's likely that the transaction was confirmed in half that time, around 4 seconds. And the other half was just simply waiting for the receipt to show to the user. And, you know, each swap was accomplished for about a penny. So it kind of speaks for itself. And yeah, just using Hashpack through that process is super intuitive, responsive, and it feels very reliable and sturdy. So personally, I find it pretty satisfying to make a swap on SaucerSwap. Of course, I have a bit of bias, but yeah, you know, it's a good experience from my point of view. And yeah, I guess just to sum it up, I think that video we released really exemplifies some of Hedera's clear benefits in a realistic and user-oriented use case.
Yeah, I've had a great experience with SaucerSwap. I've done hundreds, if not thousands, of transactions and trades and everything else. But thank you so much for swinging by and giving us those explanations. And good luck with single-sided staking.
Awesome. Thanks, Brendan.
Yeah, Zep, I loved seeing that comparison between the different platforms, and it looks like they're going to come out with some additional stuff going through that. Lehman Swap, one of our new DEXs, is going to be coming online in the months to come, and they're going through their NFT sale right now. And again, I have a clip for that, so let's take a look. I appreciate you making some time, Coffee.
Absolutely. Thanks for having me on again.
All right, so tell us about your NFT sale for Lehman Swap.
Sure. So we're selling in 3 different tiers. There's a tier 1, 2, and 3. Tier 1 being the highest or the one with the most tokens associated with it, the voucher. We are also giving a set bonus. So if you own all 3 tiers, you'll be getting a 10% boost for the amount of tokens of that set.
Mm-hmm.
So for each set, you'll get an additional 10%. And then any NFTs on top of that, you'll be able to boost them using a system we're calling the straws. Now, the straws will be released as an airdrop for each round, and they'll be unique for each round. For each straw, depending on your tier, you'll get a different token boost associated with it. So for tier 3, you'll get 0.56% up to 0.7% extra juice and VX juice. Tier 2, you get 0.71% to 0.85%. And tier 1, you'll get 0.86% up to 1%. Now, for each round, the only ones that will be counted towards your token boost would be the highest boost percentage that you get. So if I buy, 3 NFTs in round 3, and I get, a 0.57%, a 0.8%, and a 1% boost, the only one that will be counted is the 1% boost. Now, that being said, the straws will stack per round. So if I have a straw in round 3, 4, 5, those 3 will all stack on top of each other. So let's just, for sake of some simplicity, say they were 1% a round. If I had 3 of those straws, they would give me 3% total. On top of that, there's also a full collection bonus for the straws. So if you own every single straw, you'll get all the percentage boost associated with those straws themselves, plus a 25% boost in your juice and VX juice. Then if you have a minimum of 2/3, so for a 10 round maximum, you'd have to have at least 7 straws to get that minimum 2/3. And you would get a 10% boost of juice and VX juice in that case.
No, and when do you actually realize these bonuses?
So there's going to be two ways because there's two different tokens. There's Juice and VX Juice. Although they are considered the same token, there are two different versions. VX Juice being a time lock derivative. The VX Juice you wouldn't be able to see in your wallet as an airdrop. It would be on the front end of our website. The Juice itself will be airdropped directly into your wallet because that would be a liquid token. So essentially, once we actually launch the platform, you'll have the Juice airdrop to your wallet that has those NFTs in it. So make sure you are holding those NFTs. We'll obviously make an announcement at the time. And then once you go onto our platform and connect that same wallet ID, you'll have the VX Juice showing on our staking page. And we'll be releasing a teaser on our UI in the coming weeks. So you'll be able to see, what it'll look like when you go to the site, what the staking mechanism will look like, and where the VX Juice will show up for your airdrop for owning these NFTs. And that goes for all collaboration projects, Creamies, Hangry, Dead Pixel Ghost Club, and Earthlings. So if you own those NFTs and you get an airdrop associated with it, it'll show up the same place where your VX Juice is. Now, that being said, with those projects, I don't know if I've publicly stated this. So what we're deciding, we went back and forth on this a lot, whether or not we want to do an equal airdrop to each NFT. But then, you run into some projects have more NFTs than others, so they're getting like an unfair weight. So what we're deciding is we're going to give an allocation of 0.4% of our total supply, or I believe that's 4 million juice, to each project. And then that project will basically just tell us how they want to distribute it to their holders. We feel like it's fair in the sense that everyone's getting the same amount per project, and then it'll be up to those NFT projects themselves to determine how to distribute the tokens internally. Of course, we would have to be doing the distribution ourselves, but they would dictate exactly how they want those tokens to be distributed.
I love how you guys are working with other projects in the ecosystem and all of your focus on tokenomics. And I can't wait for Lehman Swap to launch. Good luck.
Really appreciate it. Thanks for having me.
So each one of our DeFi platforms that comes out puts a little bit of a different twist. So they're adding something to our DeFi ecosystem every single time. But let's get into the numbers of what we're seeing in our DeFi space. SaucerSwap has dropped below 15 million total value locked. Now that's not because people are removing anything from our DeFi ecosystem, but just because the value has dropped because of the craziness with FTX this week. As far as the farming rewards on SaucerSwap, we have HBAR USDC sitting at 83%. So that's ticked up a little bit. We have HBAR Sauce sitting at 50% and HBAR sitting at just over 20%. So pretty much holding steady or going up a little bit as far as the farming rewards on SaucerSwap. And the LP rewards are looking good as well. HBAR sitting at just under 1%. Sauce HBAR sitting at 5%. That's looking pretty strong. And then really strong USDC HBAR at 20%. And of course, those farming rewards are compounded with the LP rewards. And moving on to HeliSwap, and they have some really interesting stuff going on. They're going to start to allow multi-rewards, which is allowing not just rewards in HBAR or their native token, but also allowing rewards in other project tokens. So we're looking at a few different projects that they might do that with. I'm going to get some more information and hopefully get a clip for that for next week's update, but I'm looking forward to it. And HeliSwap, their farming rewards are all in HBAR, where SaucerSwap is both in HBAR and in Sauce, and the rewards are looking pretty good on HeliSwap. Right now, USDC HBAR is at 86%, so that's pretty close to what we're seeing on SaucerSwap. The rewards for their OHM token for HBAR OHM is sitting at 137%, for USDC OHM is sitting at over 200%, and HBAR is sitting at 24%. So pretty similar to what we're seeing on SaucerSwap. So they're pretty much in line at this point, or close. The main difference, again, being that SaucerSwap pays out their farming rewards in both Sauce and HBAR, where HeliSwap, it's just in HBAR. Stater had some big news this week as well. They're going into version 3, which was the incorporation of Hedera native staking. So right now, the extra staking rewards above native staking is 100,000 HBAR per epoch or per day. That gives you an APY if you're using Stater's liquid staking of just under 10%. The HBAR X exchange rate is sitting at just under 1.2 HBAR per HBAR X, meaning that if you participated in this program from the beginning, you've earned about 20% in terms of HBAR, and their total value locked is sitting at just under 1.4 billion HBAR. All right, so moving on to the HBAR market. Of course, HBAR got rocked with the rest of the crypto market. It broke through the support that we had been talking about for several weeks at about 5.5 cents. It's sitting at about 4.7 cents right now. There was a little bit of a reprieve the day after on Thursday because the CPI, inflation in the United States, came in a little bit lower than expected at 7.7%. Hopefully that means there's a turn and the Fed won't have to raise interest rates as aggressively. That's what we're hoping for. So looking forward as far as support, we really have to go all the way back to 2020. There should be support in the 4.3 cent range and then really strong support between 2.8 and 3 cents. So overall, not the greatest week when it comes to crypto, or more specifically HBAR here. But as we said 9 months ago, the next 9 months should continue offering good opportunities to get entry points. But of course, there's plenty of risk associated with that as well. All right, Zep, so are you ready to get into our giveaway?
Yes, sir.
And the winner of our grand prize, which is, of course, one of the 1 centers, as well as some of those physical coins, an Earthlings HBAR Bull airship, as well as a silver HBAR Bull Earthlings pin, is HBAR Bro 1. HBAR Bro 1 is the grand prize winner. And the second place winner of another HBAR Bull airship from Earthlings, as well as a classic HBAR Bull pin, is Twitter handle Shaft. Twitter handle Shaft. Now, you guys do need to answer. I'll send out a DM on Twitter. You need to answer that within the next week, or we're going to have to do another drawing. All right, Zep, that's pretty much all we have. Is there anything else you'd like to pass on to the community before we let you go?
Yeah, I mean, it's been a very turbulent week. It's definitely the most turbulent since Duke won, which was terrifyingly not that long ago. But I think for anyone in high risk assets, you know, it's been difficult recently, and especially this week in crypto. So I mean, so everyone in the HBAR community probably just like, you know, stay safe out there. You know, if anyone wants to reach out, we've obviously got multiple channels to do that on. And you know, the exciting thing is that despite market conditions, the HBAR Foundation and Hedera will keep building, and that's what matters the most. You know, it's like we're in the HBAR token itself is in a delicate position, as is my personal finances, along with I'm sure a lot of other people's. But you know, the foundation isn't going to stop building. And you know, if you just look at the Twitter this week or whatever platform we're on, there's been multitudes of announcements, especially around COP27, especially around sustainability, but also with ones like EA Sports and stuff like that. So yeah, it's gonna keep being exciting, but it's gonna be difficult financially for a while as an investor, and you know, maybe not for a while, who knows, but it definitely is currently. So yeah, just shout out everyone that's in a very similar boat as we all are.
Yeah, regardless of what's happening as far as the price, the value that's being built out on the Hedera network is undeniable and pretty much going exponential. Thanks everybody for stopping by. Check out that video we did on the spike in network usage earlier in this week, and we'll see you next week.